Hi everyone, this is Rob Roy and welcome to a special edition of the Elliott Wave Options S&P 500 U.S. market update. I say a special edition because a level that we've been talking about for weeks and weeks and weeks had multiple Elliott Wave patterns pointing to the same price target. Market hit it dead on today. Let's take a look at the charts. And as I said in the intro, it was a pretty amazing day in the market. If you go to our YouTube channel, Elliott Wave Options, and scroll on down a bit, you'll come across a thumbnail that says Elliott Wave Outlook 2020. So if you click on that, you'll see that that was actually posted on February 18th of 2020. Now, if we take a look at the chart of the market, February 18th was right here, right before the big drop from the coronavirus. Now, you can go back and watch that recording on your own, but I wanted to highlight a couple things out of it that I think you'll find fascinating that correspond with where the market is right now. We showed that we are in wave 3 of a super cycle pattern, and when you have a super cycle, especially wave 3, you look to figure out where can wave 3 go. Well, the Elliott Wave rules are wave 3 can go 161.8% of wave 1. Well, we've already passed that. Or the next level would then be 261.8 times wave 1. Well, that gives us a target price of 362 for the end of the wave 3 in that super cycle pattern. And if that is the end of wave 3, then possibly something like a wave 4 correction here, followed by a wave 5 extension. But we continue to show you, leaving that ghosted in there, that in the wave 3, there was also a cycle 5-wave pattern. So a 5-wave pattern within the wave 3, meaning that we had a complex wave 3 in that super cycle pattern that gave us 161.8% extension level at roughly 346. So a little bit below where the wave 3 super cycle would end. But as we move to the weekly chart, you can see that we have a wave 5 in this cycle pattern that is a complex wave. There's a 5-wave pattern within that wave 5 where the top of the tap box, time and price projection for the Elliott Wave 5, is also at 346, another pattern giving us that same level. Well, also included within this wave 5, the complex wave 5, is a large zigzag pattern, which gives us 100% extension on the wave C, which is what I look for all the time. If you've been watching any of these recordings, that gives us, guess what? 346. So that was 3 different Elliott Wave patterns giving us the potential target of 346. And look at the time frame. Where we are, August is where we were talking about as far as that hitting. In addition to that, we posted things to consider for the market to continue in its rally or what could derail the rally. And we're in an election cycle. Spreads on debt products were improving. The S&P had grown more quickly than 1999. But then we also said a potential black swan is the coronavirus. And we posted that like 3 days before, boom, everything started moving to the downside. It was when it was still pretty much a thing in China. So pretty fascinating. So if we get back and look at the market now, if you've watched any of the recordings recently that we've posted here, I've been highlighting this zigzag pattern that gave us 347 as a target price. And where did we close today? 347. So that was 4 different Elliott Wave patterns now, giving us roughly the target price of where we are now. So the question is, what happens now? Where do we go from here? Now remember that 362 level was the end of the wave 3 super cycle. That also is pretty close to 138.2%, which is the next extended level if this zigzag pattern extends on higher. Look what's going on in the market, which I think makes a lot of sense. Then we had this resistance area here at the previous wave 5 high. Took a while to break through it, and then boom, 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 3 big days. Now, is that enough to bring that retail money from the sidelines? If we take a look at the volume chart, not really a whole lot of volume has come in yet. So I'm not sure that these 3 days are enough for the smart money, the institutions, to start selling into the retail traders. So I think there's a pretty good case that we could continue up to this level. Now, I wouldn't be surprised if we made a bit of a pullback first, but I also wouldn't be surprised if we just blow right up through it and hit that extended level. It's going to be very interesting to see how it plays out. Now, if you're bullish, and you'd like to see that continue, one of the best things we have is the VIX. We're still in that huge descending triangle, much one of the past recordings that have highlighted that numerous times. We haven't quite closed this gap here, but pretty darn close. But we're still well above 20, as you can see on the VIX, which is enough energy, if you will, enough momentum to propel the market, in my opinion, up to that extended level. So again, do we have resistance? Do we continue up? It'll be interesting to see. I wanted to show you the dollar. The dollar has found some support here, a little bit to the downside today. So if we take a look at the chart of silver, you can see that there was a bid today with that downward move in the dollar. And there's been some commentary on YouTube about the fact that I had sent out an alert to our subscribers, a bullish alert. We had a bullish alert on this move here to the upside, but I don't like vertical moves, so we closed that out, waited for this consolidation, and then sent out another bullish alert. And the comment was, you're dead wrong on the timing. We're set up for a big downward move in the metals. Well, maybe we do have a big downward move that's based from this triangle pattern that we have here in the market. And you can see that it looks like we kind of broke out today. Now remember, with the triangles, it takes 2 days, second day confirmation day. We'll see how that plays out. It wouldn't surprise me if we did break to the downside, because triangles, according to Elliott, take precedent. However, I don't think we're necessarily set up. I don't see a pattern that shows that we're set up for a big downward move. It's just we could break one way or the other out of this triangle. And if we have a follow-through day to the upside, then that could mean that we're continuing on up. And then we have a similar pattern, but in this case it's a descending triangle, as you can see in gold. So symmetrical triangle in silver, descending triangle in gold, also trying to break off that level of support today. Same thing, need a second day confirmation day. I also wanted to show you this. We talked about this a while back. A couple of charts of copper here. Remember when we did the recording Dr. Copper? It didn't garner a lot of attention, but copper has been on a big run since we talked about that. So lots of different securities to trade out there, lots of different things affected by the Fed liquidity. I think that a lot is going to depend on if the Federal Reserve comes through with what they have hinted in their September meeting, that there'll be another round of QE as Congress continues to fight over whether there's going to be more stimulus. So big day here at Elliott Wave Options. Nailed it right on the nose. So if you visit our YouTube page to take a look at that Elliott Wave Outlook recording, while you're there, give us a like or hit subscribe. We've been doing a pretty good job with these recordings over the past 2.5 years, forecasting based on Elliott Wave where the market was going to go. And here's a testimonial from YouTube. It says, I just saw it. I went back and watched all your S&P videos since late 2019. Wish I found your channel earlier. You've been spot on with your trades and advice throughout. Absolutely joining this group soon. Thanks a bunch, man. So go back and take a look at that recording. So in summary, COVID, no COVID, Elliott Wave didn't seem to care. We moved up and hit those targets. Was in some weird way this being factored in with the fact that the timing still was about where it was forecast back in our recording in February. It's just fascinating to think about. We were talking about that in our Trade Finder webinar just this past Tuesday. I invite you to join the Trade Finder webinar. Each and every Tuesday we go through the market. We look for case study considerations. We've been doing it for a number of weeks now, and we've yet to have a losing case study consideration. So love to have you follow along with us. That gets you up to date. Hope everybody's well. Take care. Talk to you soon. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.